So, welcome back. Let's continue our class where we stop talking about the sell side and the buy side liquidity. The stop on that is there, on stop loss is that stop. Then on something. So we call it stop loss on. Hunting for people stop loss because the moment those people are being liquidated in the market, that's when we know that liquidity has already been provided in the market. Don't forget that I explained to you that liquidity is what moved the market. I still remember I said that liquidity is what moved the market. So let's check USD Japanese pair. Now, I explained something the other time in the last video that I dropped, the grabbing of liquidity, and I sent you a particular image in your WhatsApp DM to be able to see what I'm showing you. Whereby you say you were kind of confused, and I later drop a voice note for you to be able to understand what I'm trying to say. Now I thought I can use this as an example. Now let's just draw this line. This look like exactly as like what I showed you in your DM on WhatsApp, the image I sent to you. Now this line that I draw here like this, it shows to us that these two, they are not equal high. Why is it that they are not equal high? Because the new high that was created was above the old high, right? So we cannot see they are both equal high. Now what we can see here is that there is a buy side liquidity stop on, because some people already will position themselves to buy here, seeing that we are using a 4 hours time frame. If I should break this thing down to around 1 hour time frame or 15-minute time frame, you will be able to understand what I'm saying very well, because it won't be just this small wick that you can see. It will be more than that. Sure, you get the candlestick that will be there. Now if you check the image I sent to you explaining the buy side liquidity, you will see what we call the before and the after. You see where that, okay, before that the market look like still is going to react, but then the market now break structure a little bit higher, then market now start to dropping again. It's just grabbing of liquidity. Now someone will think that this is a break of structure to the upside, so the person will now take a what, we take a buy in this zone, not knowing that the market only wants to go grab what, liquidity. Then the moment the market grab the liquidity, the market was started falling again, started falling towards to this range. See the way the market fall to this range, then the market started rallying back up. Now let me show us. Let me just run out time frame. Let me use 15 minutes time frame. Let's just start network. Okay. Okay. Network is kind of bad. That's what I'm saying. This week, this 2 week is a grabbing of what? Of liquidity. So some people take a buy. That's why it is called buy side liquidity. They will be in profit for what? For a short while to this range. Then the market will start dropping back, because actually the market is in a downtrend. Market just want to grab small liquidity upward. That's why most times, if you should switch to a higher time frame, you see that it's a week. It's the week of the candle that we grab that liquidity, then market will start falling. Because just to that, okay, market did not open that place and market did not close that place, just that within that time frame market try to push up a little to go and clear people's stop loss. People already place their stop loss, Okay, some people that want to take a buy a sell also place their stop loss around the area because they did not wait for confirmation. Because actually, this is the confirmation where you should enter the market. Now, I told you that except you are a witch, you should not automatically know that the market will start falling until you see a confirmation. So the market is like, okay, this is the last candlestick that was formed on a 15 minute time frame. The market dropped a little. Market now came back towards to our end here. Market started falling. That's where you want to position yourself. So that's just the way the market is. The opposite of this is also for the buy side liquidity. Let me look for the one I will use to explain the this is fast time frame. Let's use this. I'm looking for the best example to use to explain the buy side liquidity. So that means I'll be looking for what? Not equal low. According to for sell side liquidity, sell side. What I just explained is the buy side liquidity. So now I'm looking for the one I can use to explain the sell side liquidity. Sell side liquidity. Let's look for the perfect one. Let me check another pair. Let me check another pair. We need to see a perfect example. Let me check BTC USD. Okay, let me make use of this. Now this is BCC USD. Let's draw this line now. We want to talk about this now. Can you see we call this place a previous low, right? And this is the new low, the newest low that was formed, right? Now, someone already positioned and said that okay, once markets reaching, market will react and start going up because this place look an area of what of support the last time market reacted here. Now what do you see the markets do now? Market now act like the market broke structure downward. So when a particular trader said that oh, the market already broke structure downward, the person is now saying that oh, there's a change in the market already. There's a there's a change of trend in the market, thinking the market is going to keep breaking structure downward. So the person started selling. Yeah. And you see the person started selling from let's say the person started selling from 78,197.6. The person will sell down to this which is 76,509.4. The person will be in profit now, but only for the person to be in a profit for a short while. Because actually the market is in a downtrend. The market just wants to use this long week to what to grab enough liquidity before the market start pushing up again. So you see the way the market push up to this range. So it's just a grabbing of liquidity. So the person that take a sell here will be liquidated because the person that's why we call it sell liquidity stop ons. The person will be liquidated because the market will only go down a little. So the person will only be in profit for a short period of time, not for a long period of time. And also the person that already placed a buyer to buy up also will also be in trouble, be at loss because the person not wait for confirmation in the market. The person just position himself here, and then I'm sure the person stop loss will be around this range. It won't be like this. So that's why stop loss is also grabbed from them. But actually, this is explaining sell side liquidity for people that take a share because they see a broke of structure to the downside, not knowing that the market just want to grab liquidity before pushing up again. So that's all on buy side, and sell side liquidity stop on. I hope you understand what I'm saying now. So I'm going to drop this video and I will need you to respond. And I want to give you an assignment. Go to your trading view, check your charts, and also show me an example of sell side liquidity and buy side liquidity, showing the previous low and the previous high, and then the new high that was formed, and explaining the place where liquidity is being grabbed. Let me just draw this. This is liquidity grabbing here for this sell side liquidity. Now that's it. So let's just stop here. So next time, I already explained equal lows and highs to you, but let me just remind you again. There is a form of liquidity also, the equal highs and the equal low. It's still here, it's been explained here, but then many times it appears when we talk about equal lows, when we see the previous day high, equal highs when we see the previous day high, then equal low the previous day low. But it is also grabbing of liquidity. That's why when I explain it to you, I make you to understand that equal low is because liquidity has not been grabbed, and then not equal low is because liquidity has been grabbed. For instance, you can call this an equal low because liquidity has not been grabbed. Now let us for instance, this is the next thing that was formed. It's no longer equal because liquidity has been what? Has been grabbed. Let me draw a line for you to confirm. If this particular one is the previous low you are working with, then liquidity has been grabbed because of this. So this and these two are equal low, but this with this they are not equal low because liquidity has been what? Has been grabbed. That's just the basic concept about it. So because trader place buy stops above equal highs and sell stop below equal low, they want to sell below equal low because thinking that equal, once they see that there is a break of structure in the equal low, then market is changing, what's changing trend, then the market will start falling. So they place a sell there. Then on their the place buy also at the equal highs, thinking that if markets break structure, then their buy will take action. Then they will know that markets will only push up a little, then market started falling to use them as what? As liquidity. So that's just the basic things about the equal low and equals. The reason why so much liquidity build up in this area of price action is because traders sees those highs, equal highs and equal low as a form of support and resistance. Now, what am I saying here? Now, look at this. Just pay attention, please. Now, people are seeing this place as support. People are seeing this as support. So that's why another person will now position himself here. Here, that but the moment now say that the market draw from this support area to this place, they think is a break of structure to the downside already, that the support level has been what? Has been taken out. So they now say, oh, the support has been broken out, then this is a breakout to let's start selling, not knowing that the market only wants to grab what? Enough liquidity. And same thing applicable for this what? The upside. They think this is a resistance, but the moment they see that the market now break through from this line, from this red dot that you can see here, that's, oh, this is the perfect time to what? To start buying up, not knowing that the market will only react. Then when the market gets to this level, market will start what? Start falling again, something like this. Market will start falling like this, and the market will just start falling from here and then start dropping. So so if price break through this area, they once again expect the market to keep going up. In the case of price breaking above equal highs, so they will expect the market to keep going up or keep going down in the case of price breaking below equal lows. So once again, it's often the contrary that happens. The other reason there is a lot of liquidity in this area of price action is because traders will also try to sell from equal highs from equal highs you want to sell now because you are seeing that equal highs as a resistance. I explained to you resistance. When you are bouncing your ball, you place your hand above it. Your hand is resistant. So anytime the ball touch your hand, the ball go down. That's resistant, resisting it. So when they see equalize, they see it as a place of resistance. So they want to sell down. So another person also is seeing that area of support as an area to buy. So when the ball hit the ground, the ball will rise again. So that's the reason why we have so much liquidity in that area. So trader will try to sell from equal highs and also try to buy from equal lows, thinking they are a strong area of support and resistance. So when price break through, they are eating all the stop losses as well. That's so even the person that I want to take a share and take a buy, they will both be in loss because one is not patient enough and one is trading against the trend in the market.